Hi, everybody. Welcome back to Ox Talks. I really appreciate you tuning into the show today. Before I get into the main topic, which is the tomorrow's jobs report and what's happening with the markets, let me quickly address these fires that are raging here in Southern California. I've had several messages from you asking if they're in any way affecting me here. I live about 2.5 hours south and east of Los Angeles County. So I'm in no way impacted here. We are getting pretty high winds in the desert the last couple of days, but thankfully we haven't had any fire issues. But my sister and her family, they live in Orange County, which is about an hour and a half south of the fires. But my brother-in-law's family, many of them have homes, family homes in the Pacific Palisades area where it's been devastated. And I got a text from my sister yesterday saying that my brother-in-law's family's houses had survived. Thankfully, two of his brothers have houses there with with their wives and children, but about 10 of their friends in surrounding neighborhood, their houses had burned to the ground. Thank God no one has been injured or lost their life. My brother-in-law was over at his brother's house yesterday all day, keeping the roof hosed down and trying to assist where possible. So it is, indirectly affecting, my family. But again, thankfully, the most important thing is no loss of life or injury. Stuff can be replaced, but it's devastating. I just checked update right now, 5 dead right now from the fires. It's the most destructive fire or fires in Los Angeles history. There's another fire that popped up last night in the Hollywood Hills. That's still going. And they said 180,000 people are under evacuation right now. So, and many of these fires are still 0% contained. They still have high winds raging in LA. It's a tinderbox. Got a lot of political issues there that things have not been taken care of. I won't go down that rabbit hole right now. Just want to let you know that I am monitoring. I do have family, that are also affected by this, and just say a prayer for everybody in Southern California today. So, the last couple of weeks I've been addressing the dynamics in the market right now, the stock market, the Fed and the expectations of what the Fed's going to do, and the interplay with the job market. Yesterday we received private jobs figures, and it showed that it's not going in the right direction. Tomorrow is the ADP jobs report that's coming out in the morning, I believe 5:30 a.m. And that's for the thumbnail for today's show is make it or break it time. As this article from Market Watch today discusses, it's a big pivotal issue potentially for the stock market. And as we know, cryptos recently appear to be trading more, consistently with what the stock market does. Again, gold and silver are kind of operating on their own right now. Maybe a little bit of a fear play. Gold was up again today. I think, don't quote me, I think over $10 an ounce. The 10-year was under control. It finished a little bit down, so nothing drastic. The dollar and oil continue to go up. Okay, so let me share the article from Market Watch today. It says investors are on edge as Friday's jobs report could make or break the stock market rally. Rising Treasury yields are ratcheting up the anxiety, it says, for equity investors. Thursday's stock market closure offered only a brief reprieve from the mounting tension. I guess today markets were closed, so if I was looking at the markets, I don't think I quoted that. If I did, I'm looking at yesterday's information. I apologize. After a day off in honor of former President Jimmy Carter's National Day of Mourning, traders will return to their desks on Friday. It won't take long until they're forced to confront the major U.S. economic report of 2025, right? The first major U.S. economic report of 2025, as December jobs data will be released at 8:30 a.m., and that is East Coast time. Okay, the data will land at a particularly precarious time, it says, for stocks. The yield on the 10-year Treasury touched its highest level since April 25th on Wednesday, according to Dow Jones market data. And the pace at which yields have been climbing lately has stoked anticipation that the 10-year might be headed toward 5%. At the same time, it says short-term yields have remained anchored, causing the spread between the 10-year and the 2-year to reach their widest level since late 2022, according to Dow Jones market data. It says the U.S. equity, it says the fear of yields rising further is a material threat to equities in an environment where equities and bonds are positively correlated. This is according to Jordan Rizzuto, Chief Investment Officer and Managing Partner at Gamma Road Capital Partners, told MarketWatch Thursday. The U.S. equity market has been wobbling for more than a month now, with much of the weakness following the Federal Reserve's December meeting, where the central bank telegraphed its intention to slow the pace of interest rate cuts in 2025. I brought this to your attention on several of the last shows. As of Wednesday's close, the S&P 500 was down 2.8% from its record close on December 6th. So that might not seem like a lot, but looking under the hood of the index, this offers a more downbeat picture. On Tuesday, the share of S&P 500 stocks trading above their 200-day moving average shrank to 51.9%, the lowest since November 2023, according to Dow Jones data. And as Willie Delwich, founder of High Mount Research, pointed out in a post on X, the social media platform, and on X, the median stock in the S&P 500 is faring far worse than the index as a whole, with a decline of 12.4% from its 2024 peak. So meanwhile, 1/4 of the stocks in the index are down 20% or more from their highs. Guys, leave your comments. Are you in the markets either as an active participant or through your 401ks? Are you day traders? Are you guys trading around this stuff and making money as it goes up, on the downside? Are you hedged? I'd love to hear people's thoughts. I'm not in the stock market, and so I'm learning every day, and I want to hear what's happening with you guys on that and how you're navigating around this, and what are you planning for? Or what are you, preparing for? This is outside the large cap space. The price action has been even more dismal. The Russell 2000, an index of small cap stocks, is down more than 8% from its record closing high in November. It says a lot of that is very indicative of late equity market cycle behavior, according to Gamma Road's Rizzuto. Depending on what the data shows Friday, jobs report could further diminish demand for stocks, or save the S&P, it says, from another weekly loss. It will likely hinge on the strength of the headline number, said Jose Torres, senior economist at Interactive Brokers. Much of the market's gains from the past 2 years can be chalked up to investors celebrating the resilience of the U.S. economy, according to this gentleman. My editorial comment would be also based upon the fact that the Fed has been cutting interest rates, and that forces people to take malinvestment. It forces people to borrow money that they shouldn't be borrowing. I say forces. It enables, people to do that. And that's when problems arise. It says that, but as signs mount that the hot economy might contribute to higher bond yields, investors could be facing a dynamic known on Wall Street as good news is bad news, meaning that good news for the economy is bad news for the stock and bond markets, meaning the Fed may very well recalibrate its position relative to rate cuts. And guys, I wouldn't be surprised to see a full pivot and returning to rate hikes if they can't find a way to get the inflation down. You have to wonder, right, is that even the game plan? Is this all baked in? Is the intention just to let inflation rage out of control and further destroy the middle and lower class? Okay, weigh in on that. Let me know what you think. It says if you get a hot number tomorrow and the unemployment rate stays the same, you can see the 10-year yield go to 4.8% and the S&P down as much as 2%, according to Torres. The hot number would be any reading north of 200,000 jobs according to this Torres guy. Okay, the Wall Street forecasters are expecting the data to show that 160,000 jobs were created last month. Okay, so I'll leave it there today, right at 10 minutes. That's what's going on tomorrow. Let's see what happens. Again, if you're in the markets, I hope you're hedged to the downside. I hope you can make money either way, right? And if you know the markets, you know what you're doing, you're not taking stock tips for people that don't know what's happening, then you should be able to properly hedge yourself. So a lot going on. We'll continue to watch the fire situation in Southern California. Pray for those folks that are impacted. Again, I appreciate all of you who are part of the channel in this community. Thank you very much. Talk to you soon. Bye.